This next session is on Sukuk and Islamic capital markets in general. The session will be chaired by Sheikh Essam Ishaq. The speakers and panelists are Dr. Zamir Iqbal from the World Bank, Mr. Ijlal Alvi from the International Islamic Financial Market, and Mr. Razwan Tajuddin from the Securities Commission of Malaysia. I would like to invite Sheikh Essam to start, please.
بسم الله الرحمن الرحيم الحمد لله والصلاة والسلام على رسول الله وعلى آله وصحبه ومن اتبع هداه وبعد. I'm looking forward to a very informative, educational, and I hope interactive session. We know that the topic of the session regarding Sukuk and the centrality of Sukuk in mobilizing funds, in managing funds, and the controversies surrounding the existing Sukuk and the contracts underlying the Sukuks. We have, of course, three prominent speakers on the topic. You have their CVs in front of you, so for the sake of brevity and saving time, I will immediately ask our panelists to begin their presentations. Each one will have around 20 minutes. I'm sure they will not take the full 20 minutes. So whoever wants to give part of his time to the others, it will be appreciated, but hopefully we will stick to the 20 minutes and not pass it. So I think I'll begin with Brother Ijlal on the right. Or would you want to? Okay. So then it will be Dr. Zamir Iqbal from the World Bank Global Islamic Finance Development Center.
Thank you, Mr. Chairman. Bismillah ar-Rahman ar-Rahim. It's my pleasure to be here, and I'm thankful to AAOIFI that they gave me an opportunity to be here. As you could see that the topic today is relevance of Sukuk to long-term financing. So before I start my presentation, I thought I'll just give you a little bit of background about the World Bank Global Islamic Finance Center. I think all of you may have heard about it yesterday during Yomi's presentation, his opening keynote talk. Now, this Global Islamic Finance Center is first center by any multilateral, which was opened last year. And the objective was that given the growing importance of Islamic finance in different countries, and there is a need for having a very robust financial sector, regulatory and supervisory framework, governance and transparency. And many of our client countries, since they have Islamic finance, they were asking us that we should be doing something in this area. So World Bank decided to open this center. The center has mainly three activities. The first one, the most important one, is to helping our client countries through either technical assistance or advisory services in the area of regulation, standard setting, corporate governance, and so. And we are already working with many countries in this respect. The second objective of the center is dealing with making it a knowledge hub on Islamic finance. As you may be aware, the World Bank has already done a couple of publications in this area, and we hope to do more in this area. My colleague Janan had a presentation on Basel III this morning, so we'll be working on the research activities as well. The third area is more on market development, helping our client countries with new products, maybe developing capital markets. And we at the World Bank are also exploring the possibility of structuring a sukuk for development purposes. So these are the key areas of on Islamic finance. If any of you are in Istanbul, I invite you to please visit our center, and I'll be very happy to welcome you. Now, coming back to our topic of presentation, why is there the need for long-term financing? I think long-term financing has becoming much more relevant every day, and there are several motivations for that. Now, there are two things happening in both on, as you can say, demand and the supply side. One is that many of the Western countries or more developed countries, the infrastructure is aging, which means that's not as it needs maintenance, needs revival, and so forth. Same time, many countries in the emerging markets are now growing. So since they're growing, they need to develop certain infrastructure. Now, this is a chart which is based on a study by the World Bank that shows you what percentage of population in different regions doesn't have access to the very basic needs such as electricity, water, sanitation, and so forth. The green bar, you could see in the middle, that shows that this is the minimum kind of a standard which is acceptable. But you could see from here that majority of regions where we have OIC countries, which has unfortunately doesn't have a very good infrastructure, and many of this population is basically lacking these facilities. So that shows that how much demand there is for building these very basic services for within the OIC countries. And the graph can also show you that whether it is in Africa or South Asia or MENA, there is certainly a big gap or need for developing. So when you develop this thing, you need financing for that. So that's the first kind of lessons. Now, there was a study done by a group of 30, and they had taken the 9 most big emerging markets or existing countries, which represent about 60% of global GDP. And their conclusion was that by 2020, they need about $18.8 trillion worth of infrastructure financing. Okay, so that shows the heavy demand. Similarly, some of our estimates, World Bank estimates, says that within the MENA region, for next couple of 10 to 15 years, MENA region very conservatively requires $75 to $100 billion worth of infrastructure over next 10 to 15 years. So that gives you an idea of why we are talking about long-term financing and why it is important. Now, what is the issue? What is happening why do we need talk about this thing? We talk about demand side. What is the issue with the supply side? Now, supply side has issue that because of the financial crisis and many other things, long-term financing is not as easy as it used to be. Okay, the reason is some of the institutions who were the source of long-term financing, they are shying away from it. They don't want to have a long-term commitment to it, and some of the other countries have very limited options. Now, cross-border capital flows are again limited to very short-term, which is not a good trend. They like to go in and come out. Long-term financing or FDI still have a certain constraint, and that is because of all governance issues in the emerging markets and lack of financial infrastructure. Now, other things which are important, you have all seen the Basel III presentation this morning, and you saw that there's a deleveraging effect on the banks, which means the banks cannot issue a very long-term funding to participate any of these infrastructure or syndication or something, because now under Basel III, they will have a certain impact, certain constraint on the leveraging. Fiscal issues are every country is facing. Most of the governments have kind of maxed out on their borrowing. It's very difficult for them to borrow. And for that matter, if we look at many of the multilaterals, including the World Bank, Asian Development Bank, and IDB, they all have a constraint of that most of countries have reaching their single borrower limit, which means they cannot extend more credit to a country because their internal policy, credit policies are restraining them for lending to these countries. Same is we have issue with aging population. That needs a different kind of infrastructure, more demand for pension and all these things. So you could see that there's both demand side and supply side factors which are impacting the issues on the long-term financing. The study I mentioned to you about the G30, that has some recommendations, and I want to give the recommendations, share with you, to kind of make a relevance to why it is relevant to Sukuk. First of all, they are recommending that make sure the investors are more prone to, more kind of acceptable to long-term horizon in their investment decisions, which means they're talking about the institutional investors, pensions, and insurance companies. Second recommendation is that create new instruments and intermediaries which are geared towards the provision of long-term finance, which means that current instruments and intermediaries, which means banking is not very conducive for long-term financing. So they got to be, and multilaterals have their own issues. And you may have heard about the BRIC Bank, which is coming out, which is exactly to address some of these issues. The third recommendation is to develop the capital markets rather than going through the intermediaries. Develop the capital markets, both debt and equity, to provide the source of long-term financing. Attract global capital flows to finance the long term. And then third one is that the regulatory framework should be very, very robust, which means that you have investor protections, you have insolvency issues, and you have a very good financial sector infrastructure in a particular country to attract this kind of long-term financing, which is cross-border. So these are all very good recommendations. Now, let's come back to the Islamic finance. Now, Islamic finance is not contained now in a small couple of countries, Muslim countries. It has, alhamdulillah, it has become quite globalized and internationalized. Now you can see that this chart shows you that wherever there is a little bit presence of Islamic finance, there's some practice of it, it shows it, and where it is in some countries it has become systemically important, so which means that the dark blue areas are where it is becoming systemically important. Now, the recent Sukuk transactions are mostly, the big deals are coming out of non-Muslim countries. You may have all heard about the UK, South Africa, Hong Kong, Luxembourg. They're all countries that are basically not looking at it as a Islamic finance as such, but they are looking at it as another product, as another innovative product, which is asset-backed and asset-backed and this thing. So they are tapping into that market. So here we see that Islamic finance is also growing, creating opportunities, investment opportunities, looking for more investment opportunities. Now, just from theoretical point of view, what is it in Islamic finance which may have a better fit for long-term financing? I'm sure you all are familiar with the theory of Islamic finance. First of all, Islamic finance is promoting participatory and the risk-sharing financing, which means that a debt-based financing, which is typically known as a risk transfer financing, as opposed to that, Islamic finance is risk-sharing finance, where both the borrowers and the lenders share risk based on the understanding of the product and the project underlying. So first kind of a thing is that theoretically Islamic investors should be have better risk tolerance because they have risk appetite towards risk-sharing products as opposed to risk transfer products, which creates leverage. And Dr. Sami very eloquently explained the dangers of leverage and the debt. So I think that's we all know. Other thing is the emphasis on materiality means that financing and the real asset should be very closely coupled. They should not be decoupled. So that means, again, in the infrastructure finance product, we are creating a real asset, and the financing will have a very close relationship with the asset and the financing. Real sector financing, same issue. Islamic finance has a preference of providing the real economy. Another area which is a bit growing much more, there's a lot of commonality between what Islamic finance advocates in terms of all the maqasid al-Shari'a, that is the socially responsible for financing, which means that ensure that proper, there's no impact on the society, there's no environment impact, there's no poverty impact, poverty a negative way, and so forth. So that is also a good trend of Islamic finance. And finally, the whole notion of economic and social justice, being able to give access to every individual to health, electricity, and all those things. So these are all positive things from coming out of the theory of Islamic finance. Now, I think you all are aware the sukuk market is growing, although the compared to the conventional securitized market, it is a relatively very low percentage. I think we did some calculation that even less than 1% of the global debt market on a very small percentage of the securitized market. But I want to look at the bottom chart, which tells you it graphs basically some of the recent sukuk and shows you how many times these sukuks were oversubscribed. Now look at the UK sukuk. UK sukuk was oversubscribed 11 times. Okay? One Sharjah was almost 10 times, South Africa was 4 times, Hong Kong was 5 times. What is this indicative of? And this indicates that there is so much demand for a sukuk-like structure and especially if it's coming from a good quality issuer like UK and so, then it has a much more appetite, much more demand. That shows you that the gap between the demand and the supply, that one issue coming in UK being oversubscribed 11 times. So that is a clear indication of a gap in the supply of sukuk. Now, sukuk has been successfully used for infrastructure financing for long term, and we have examples of GACA, very famous GACA issue from Saudi Arabia. Malaysians have done, and I hope my other panelists will shed light on their experience in Malaysia. I understand they have done something for their international airport to finance it. So these are the couple of success stories of using sukuk for the infrastructure. So far, what we have seen there's clearly a need for long-term financing all over the globe and within the MENA region. There's a clearly appetite for sukuk from the investor's point of view. Now, why sukuk is now relevant for long-term financing? I think we discussed some of these things. First make issue is that because it is a asset-based, and if the sukuk is structured according to true essence of Sharia, which is risk sharing, rather than trying to wrap it around a kind of a debt-like security, then it has an element of risk sharing, which is very important for the long term. Now, thing is, a typical conventional investor would not go into infrastructure because they think that too much risk, and they are not willing to take the risk because they think they're just giving a debt, and they think the debt is too risky. Whereas if you try to structure a sukuk where you are actually getting an ownership in the real asset, then your risk is not that much, and you're even concerned about the risk goes down. So that is a very important feature between the sukuk and the need for long-term financing, is the element of risk sharing if it is an asset-based, if it is structured properly. Now, again, we know that even OIC country, there's more need for this kind of thing. Now, the third thing is that sukuk can be structured and it can be marketed to both Islamic and conventional investor. If you look at, I think, IDB's last sukuk, which was invested about more than 50% by European and US, because their mutual fund and their pension funds are looking at as a good quality paper. So the one thing what you can see that there's a lot of commonalities between the SRI investors, socially responsible investor in the conventional side, and they like the Islamic principles because it's all based on ethics. So therefore, even if you structure a sukuk, it's not that it's only marketed towards the Islamic investors. It can be marketed both to invest Islamic as well as conventional. So I think that is also a positive thing, that there's quite a bit interest. And again, as a World Bank, we're also working with some countries to see how we could structure a green sukuk, which is for, will be very attractive to SRE investors. Now, during this annual meetings 2 months ago, World Bank announced establishment of a global infrastructure facility, precisely because to address these issues. And we were involved, our team was involved with that, and we were also considering how we could utilize, sukuk through that facility to provide some of the financing needed for the OIC countries and the Muslim countries. Now, having said this thing, let's kind of just try to conclude that how could we leverage Islamic finance for long-term finance? The thing is, as we can go back to the recommendation by G30, that we need to have a very good financial infrastructure or regulatory framework to attract. We know that in terms of the instrument design, sukuk is a very ideal for project finance, and it has an element of being linked with the asset, element of risk sharing, everything. But then at the same time, investors need to have their protections, so they need to see in every country what kind of investor protection is there, what kind of insolvency laws are there, what is the credit standing, and what is the quality of underlying asset, what is the project, and so forth. So in that sense, I think it is we need to develop, or the OIC countries or Muslim countries need to develop a very good securitization system. Securitization means, because assets are securitized products, so they need to have a securitization laws, they need to have securitization infrastructure, agencies to make sure that will certainly enhance the sukuk market. We need to attract pension and insurance, they are the institutional investors, and there are two kinds of investors who are always interested in the long-term investment, because the pension liabilities are long-term, so they're looking for long-term investment. So therefore, they are the ideal investor base to attract for such thing. And again, you may know, many pension funds in many countries, I know that in Malaysia, I think Employee Provident Fund, EPF, have now a certain target that they want to have certain percentage of their pension assets being invested in the Islamic finance. So one can tap into that market and see that whether you can attract those to invest in these sukuks. We need to have very, again, robust capital markets with all securitization, both equity and asset-backed, because there's no debt market in the Islamic finance. Now, last thing which we need to kind of do, which our experience has been after dealing with many countries and thing, people know about Islamic finance, they talk about Islamic finance, but they have a very low understanding of what Islamic finance is about. So it's very important that we pay attention on the financial literacy of saying that what is actually Islamic finance, how it distinguishes it. I have come across so many people in countries, people are very skeptical about, is this really truly Shari'a compliant, or what is the difference between this Islamic and conventional? So a lot of kind of a confusion in many of minds of these investors. So in order to mobilize the sukuk market, I think we need to educate, educate is not the right word probably, but we need to enhance the awareness and financial literacy of both on the investors and on the borrower side, that what are the true Islamic essence of true Islamic finance is. With that, thank you so much for your attention, and I hope I'll be happy to take any questions after the presentation. Thank you so much.
Thank you very much, Dr. Iqbal, for a very poignant and succinct addressing of all the relevant issues. Everything almost that needs to be said, you said it in very concise, focused form. So now we have Dr. Tajuddin, who's the Deputy General Manager and Head of the Islamic Capital Markets Department. Huh? Okay, we have a change again. Brother Ijlal Alwi, the CEO of the IIFM, International Islamic Financial.
Bismillahirrahmanirrahim. Assalamu alaikum wa rahmatullahi wa barakatuhu. It's indeed a pleasure and honor to be here today. I'm thankful to AAOIFI and World Bank for inviting me, and also to CBB for their support and involvement in IFM. Briefly about IFM, I'm sure most of you are aware, but our work involves, in fact, most of the transactions which takes place in the Islamic industry. We work on the Islamic legal documentation, which was a subject yesterday, and we work on standard templates. So that is the area we work on. Of course, there are Sharia implications, and we use AAOIFI Sharia standards, so it's not really replicating. We are, complementing each other. Similarly with IFSB, if there is a regulation issue, we always refer to that. And with that background, we sort of work in terms of bringing, standardized, unified form, which has Sharia harmonization there. It has legal, requirements which needs to be there in terms of the governing law, which is a commercial law, and also looking at the market practices. So this is, encompassing everything what we have. Now, the main subject on the sukuk, and this is the area we, of course, very closely look at, and we sort of are involved in that, and something, inshallah, will be starting soon in this direction. We do have our sukuk report, which we publish, and some of the figures I'm taking from there and our source, but because of its publication is on 1st December, inshallah. So I'm not really going into the actual numbers. I think the main thing is some of the issues we need to highlight, and I'm trying to highlight those and focus on those. If you look at sukuk issuances, and if you take, pre-crisis level, 2007 was the, highest year at that time. But the level, like Dr. Zamir rightly mentioned, even at that time, the levels are much lower than what we have now. Since 2011, when we have seen sukuk being successfully restructured, some of the international sukuks ran into trouble, and they were restructured, most of them, and we could find the legal solutions and also the Sharia. Of course, there are certain things we still have to develop, but generally those exercises were successful, and the market confidence returned in Islamic also was always there. We didn't have the debt issue, high level of debt, which was mentioned in the morning. I think that's one key aspect is there. What we have at the moment, if you look at the sukuk, is asset-based. And these are sort of, I think the practical issues are there. Ideally, for risk sharing, we should have asset-backed sukuk. But then there are practical issues. There are certain issues tried from UAE, developer I know property. When it tried to come in the market, the issue was more, whether investors were willing to take the risk of underlying assets rather than just the obligation. Pricing is another issue. When the underlying asset is there, whether you can price it at what level, because that's another key issue there. Other issue could be the title transfer. And we know in many sort of countries, especially in GCC, we have seen, the title transfer is the issue. And when you see, generally the sovereigns, when they're issuing, naturally those assets, the government asset cannot be transferred, the title transfer. So naturally we move towards asset base. And our respected scholars are there. And we know, asset base is another structure, we do it, but we try to, I think what we are looking at to see how we can improve the low level of asset-backed sukuk, which I hope, inshallah, over the period of time, we might start seeing. What we have seen in terms of the long-term sukuk, and again, we can, I think, distinguish from the pre-crisis, which I take it from 2009 up till, and then you take it from there next 5 years. What we have seen, there is improvement in the sukuk, in the long-term sukuk, and I'll just come to that slide. But before that, what we have seen in the key areas where the long-term sukuk has been issued is project financing, enhancements of capital base, education, that was a very interesting one, and I will cover, infrastructure development, and expansion of corporate business. Now, if you look at it, the picture, again, I think to be fair to our industry, given our size, and we should not really, in my view, a humble opinion, make comparison. We have to improve our industry. And with sukuk, I think the progress has been good. We have seen like 130 billion plus sukuk issuance for the last 3 years. And 2014 looks, I think, maybe slightly better than 2013 when we had about global sukuk issuance of about 138 billion, which all the jurisdiction included. And if you see the 10-year sukuk, this was a problem I think we are trying to slowly address, is that the market share of long-term sukuk has moved from 2009 level of around under 10 to around 20% now. So this is sort of a positive development, and overall sukuk issued in the long-term sukuk, which are 10 years, and we have seen now 30 years sukuk coming in from the GCC, from Malaysia, from Indonesia, and I'm sure other countries will follow. So that I think the progress in the long term is reasonable in my view, what we are moving on. Now, coming to perpetual sukuk, and I think this is a very interesting development, especially from the banking side, given the Basel III requirement and Tier 1 capital, Tier 2 capital requirements, and it allows basically in the Tier 2 capital of additional capital up to certain percentage of 1.5% of the minimum capital. And we have seen some very heavily oversubscribed sukuk issuances. It started with Abu Dhabi Islamic. It's not 2, it's 3 main issuers which came out with the perpetual. Abu Dhabi Islamic was the first one. And at that time, the pricing level was record, and then we followed by Dubai Islamic. And recently in 2014 is Al Hilal Bank. And their pricing level was even lower than Abu Dhabi Islamic, and it was in the range of around 4.6%. So this is something which is a positive development. We have seen also a school entering, in the market of sukuk. When it was coming out in October in 2013, I happened to be in UAE at that time, and people were talking whether it will be successfully placed, what could be the pricing level. And it came at a very attractive profit rate of around 12%. Subsequently, it has moved to around 10% premium, and I think of late there was some buyout. So I think it's maybe further improved. But you can see, the successful nature of perpetual sukuk. And there is, of course, certain things we have to see. These are perpetual in nature, but generally there is a life of the company. There is also, in call option is always there. In some case, Gem Sukuk has a very interesting call option of, stepping up the profit rate by 4%. So that will make it very difficult, I think, for the issuer to, continue. So idea is maybe, after 5 years, it can be, called back. We have seen also sukuk issuance from Malaysian Airline. We have seen also Al Marai from Saudi Arabia, which was the first one to issue. So there is, I think, good development which is taking place in the Islamic industry in the form of perpetual sukuks. Few case studies, if we look at it, in terms of, Saudi Aramco was the first one which issued a long-dated sukuk, which was 10 to 30 years sukuk. And it was, very successfully launched in 2012. And again, if you look at the structure side of sukuks, which I have not, covered in detail, but we'll try to, give you an idea about some of the case studies I'm using, is mostly it's used the mudaraba structure, or it's a hybrid, which is ijara and musharaka structures has been used. Sadara sukuk is another heavily subscribed long-term sukuk, which came from Saudi Arabia. And you can see, they have increased the size to Saudi Riyal 7.5 billion, given the market requirement. And maturities also, it's something, if you see, they are moving more towards 15 years, 30 years, which I think is a very positive development which is taking place. Again, there will be some issues in terms of the liquidity mismatches, which I will, in the end, try to briefly mention about those. This is one of the largest sukuk out of Malaysia. I don't know, the computer is doing something, which is Plus Expressway. And this was, to date, is the largest sukuk issued for the infrastructure, and which sort of matches the long-term income stream, which is the long-term sort of financing obligation. So that's the perfect match. And I think this is translated to around 9.7 billion. So this is the largest sukuk issued. It had various maturities ranging from 10 years to 15 years. And this is something which was very successfully launched. It's a domestic sukuk. So it came from the Malaysian market. And you can see the depth of the Malaysian capital markets, and also the stability of the currency. We have also seen interesting feature when you talk about the currencies is looking at issuers from, let's say, Abu Dhabi, National Bank of Abu Dhabi going to Malaysia to issue a ringgit sukuk. We have seen from Bahrain, Mumtalakat going to Malaysia and issued ringgit. Vice versa, there are issuances from Chinese yuan as well. So the currency side is also increasing. So that's another area, tahawut, which we have to be mindful. And I will try to briefly point out and flag out that area to look at. Indonesia has, for the last 4 or 5 years, been playing a very critical role, especially in terms of not only infrastructure, long-term sukuk, but if you see the size of nominal value, it is translated to around $82 only. So this is something which they are tapping the retail side of the market, which we have to look at it, because there is a lot of requirement from the retail. And I think we need to see for the retail investors, of course, there is issue of safekeeping, what would be the cost, but this is some areas I would suggest for GCC banks, especially, to look at the retail and how to sort of make it for small investors, less expensive to hold the sukuk. I think this is something probably we have to see. And this is, their plan for infrastructure project financing sukuk by Indonesia, which they have been successfully doing. And you can see the maturity again going up to 2037. So I'll be very old by then. But this is something which I think a positive development, again, from Indonesia, which is a highly populated Muslim country. Few takeaways which I would like to highlight. One is the recent search of sukuk, long-term sukuk, and sort of it looks like this trend is likely to continue. But what we will see, I think there may be, in terms of the rates, things may differ, and may have to look at it, especially when we use the reference rate, either LIBOR or swap, mid-swap rate, what we use in the banking world. We might see more towards moving towards floating rate sukuks, and which provides less trading opportunities. What we have seen in sukuk now, I mean, at least when the sukuk comes, there is some trading takes place. So it's not really, we have fully addressed the secondary market issue, but I think we have, for some extent, have created some kind of a secondary market, which is a positive development. Now, few points I have is looking at the liquidity mismatch. When you have these long-term sukuks, naturally, the banks, they should have, the liability side to be sort of matching, if not. And I think that's one area which Islamic institution in general will have to look at it, because generally their sort of deposit base would be, sort of looking at, current account, and I mean these type, which I think, or I mean others. So I think this is something which for the long-term sukuk, it is there. Although we have now seen some, and IFM chairman was mentioning, Mr. Khalid, in later part of his closing remarks about I'adat al-Shara and repurchase. Although in Islamic finance, we are sort of, not be able to, because of bridging the Shari'a gap and the credit side, to come out with the repurchase, the repo, which in my view and our finding is very difficult. We have been talking to, Mashayikh on this issue, and I think we need to look into it. And this is the area where, in terms of the repo, I'm sure we cannot really replicate. In some cases, we can. But from what IFM has produced in terms of creating sort of liquidity for a longer tenor is the collateralized structure. And we had, alhamdulillah, launched and published our standard on 17th November, so just 2 days ago. And I think that, to some extent, will help in terms of managing the sukuk portfolios. Of course, you can also have portfolio of equities, but generally, I think in terms of corporate actions and all, in terms of the nature of sukuk being a fixed profile, that fits well in terms of liquidity management. And that's, I think, something which we have to look. Other area which, again, we have to see is looking at, like I mentioned, the currency risk, and we also have rate of return risk, which comes from, fixed versus floating, what we see in sukuk. Again, on this area, we have produced documentation. On the currency side, we are working, but Mubadat al-Arba, which is profit rate swap, is already available, those standards. So these are some of the development which will help the long-term sukuk market, which we sort of are trying to further develop, given the requirement from the pension funds and also long-term investors, takaful, and other investors. So our base, sort of investor base, is something which is improving, but we have to work more diligently on these aspects. With those remarks, I will close my or I'll finish my presentation, and I hope I was able to provide you with some information which will be useful. Thank you for your attention. Jazakallah khair. Assalamu alaikum.
Thank you very much, Brother Ijlal, for this very swift and comprehensive survey of the market regarding the challenges and the prospects for sukuk, for long-time financing. We move now to our final presenter, and that's Mr. Radwan Tajuddin, Deputy General Manager and Head of Islamic Capital Markets Department, Securities Commission, Malaysia.
Bismillahirrahmanirrahim. Assalamu alaikum warahmatullahi ta'ala wabarakatuh. A very good morning to everyone. First and foremost, I would like to congratulate AAOIFI and World Bank for organizing this event. I think it's a successful event, and also to give the opportunity for Malaysia to be part of this program. Now, my session is basically to share some experience in relation to the development of the sukuk market, as well as the development of the Islamic capital market in terms of providing long-term financing for the channeling of capital to the productive economic sectors. Now, my two brothers before me have basically spoken and giving a strong focus on the development of the sukuk market. What I will do is to give an observation as to the state of the industry in general, and perhaps share the development of the capital market, how basically the Islamic capital market basically offers an opportunity to channel long-term financing for the development of economic sectors within the economy. Some observation in terms of infrastructure investment needs alone. Okay? These are just infrastructure investment needs alone. OECD have estimated that global requirements until the year 2030 is about 71 trillion US dollars. The World Bank estimated that in the GCC countries alone, the requirement for infrastructure needs is 535 billion to about 2 trillion until the year 2020. Again, the World Bank, in Africa alone, annual financing gap for infrastructure development is estimated about 35 billion US dollars a year. The IFC estimated that emerging markets requirement for infrastructure development alone, right, is 21 trillion US dollars until the year 2018. So general observations. So we all agree that basically there's a huge demand for the development of infrastructure alone, right, without taking into consideration other productive sectors of the economy, right? So, so we all agree about the need to better the quality of life of the population, of the world population, by investing in the various infrastructure needs. Another observation is basically mobilization of capital in the economy. As we all see, basically these are the main sources of capital that is being channeled into the productive sectors of the economy by the government, by multilateral institutions, the World Bank, the Asian Development Bank, Islamic Development Bank, and various other development banks. Foreign direct investments by MNCs globally into various emerging markets globally. And more importantly, the role of financial markets in mobilizing capital into the various sectors of the economy, especially by the private sectors. I think there is more and more reliant and increasingly importance in terms of the role of financial markets. And if you look at the trends of mobilizations of capital from the financial markets, are mainly domestic-centric. Very seldom do you see basically cross-border flows of capital being emphasized by governments. I think by Brother Ijlal, Brother Zamir, and Dr. Sami earlier demonstrated basically the various financial crises that has happened over the past decades, including the Asian financial crisis in the 1990s in Asia. Now, the Asian financial crisis is not just basically a funding mismatch between short-term and long-term financing, but it's also what we call as double mismatch, where basically, for instance, in Thailand, excessive borrowings in foreign currency, and the money are being basically channeled to finance domestic assets in local currency. So you see currency mismatch as well, not just short-term and long-term mismatch. So you have that double whammy in terms of mismatch. And this is why government is quite reluctant and set prudential limits in terms of foreign financing, securing foreign financings, because of the potential exposure to risk and presenting it as a systemic risk to the whole financial system, as demonstrated by the Asian financial crisis in the 1990s. Right? So, another observation, the increasing reliance on financial markets to mobilize capital into the productive sectors of the economy. Now, as we speak today, there is what we now know as an Islamic capital market. Right? There is a value proposition for the development of an Islamic capital market. We all agree to that. And basically, and there is a strong case to develop an Islamic capital market so that you mobilize long-term capital for long-term development. Right? And developing a strong case for the development of the capital market requires the development of a complete ecosystem. And the ecosystem requires various building blocks. First and foremost is basically, having a comprehensive legal and regulatory frameworks. I think this is the single most important factor, right, to provide the kind of certainty and stability to the marketplace. Tax and accounting framework. Certain jurisdictions doesn't have basically a taxation system in their countries. So one problem solved. You do not have the requirement to have a tax neutrality a framework for you to develop Islamic finance, since there's no taxation system within a particular jurisdictions. So countries in the GCC, countries that are all producing countries, normally do not have a proper taxation system. And this creates the kind of environment that should basically prosper in terms of developing Islamic finance and especially Islamic capital market, because of the fact that there's no requirement for a tax neutrality framework. Right? And tax neutrality is basically a challenge to most jurisdictions, especially in recent development, as basically demonstrated by Brother Islam. The fact that basically, countries like the UK, Luxembourg, South Africa, basically issuing sovereign sukuk, it clearly gives a recognition to Islamic finance. It's the fact that, governments in these Western countries are now willing to amend their tax laws just to facilitate Islamic finance. It's a recognition in itself. Right? So these are important developments. Well-developed Islamic banks and takaful sectors, this complements the development of Islamic capital market. I think you can't have an Islamic capital market without a well-developed Islamic banking and takaful sectors. Liquidity playing a significantly important role, both in terms of supply of liquidity as well as secondary trading of securities in terms of its liquidity. Diverse pool of players on the demand side and supply side, as mentioned by our brothers earlier. Strong intermediation institutions. These are important because it provides the kind of capabilities for them to basically manage various fundraising exercises, as well as managing Islamic assets. And lastly, supply of talent pool into the marketplace. I think there's a lot of investments are being made currently to basically ensure the sustained supply of talent pool into the marketplace, so that there's capability that will sustain the development of the Islamic capital market. And lastly, the distinct feature that differentiates between Islamic capital market, Islamic finance, and conventional finance, putting in place a proper Shari'a governance framework. Now, the models varies from countries to countries, right? But these are the single most essential element in developing Islamic finance and the Islamic capital market. Now, so these are the basic building blocks in developing the Islamic capital market. Now, if you go to the next level of trying to be internationally competitive, right, you need to further strengthen the ecosystem by having additional building blocks. Linkages. Having linkages amongst jurisdictions, developing that linkages is important to promote cross-border flows, expand market, and develop scale. Because without scale, we will never be competitive in terms of both pricing, in terms of the quality of services that we offer into the marketplace. Liberalization policies is just as important. I think we need a very strong will in terms of having policies that promotes liberalizations, that basically promotes cross-border flows of not just products and services, but also people, that basically where we can leverage on capabilities within this industry. Risk management practices, I think this is an area that needs to be really invested upon. Even in the context of Malaysia, I think this is an area that really needs to be invested further, because we just do not have the right kind of risk management capabilities to take on the additional risk appetite of going abroad and arranging the kind of business and transactions in the marketplace. Brother Zamir mentioned about sustainable and responsible investments, and also the concept of financial inclusion. I think this is very important. We talk about the principle of democratization of capital. I think in trying to channel and develop the economy, I think there should be strong emphasis in basically providing, in terms of providing capital to the small and medium enterprise entities in the marketplace. So access to capital is important, just as important as providing access to investment to the mom and pops or the retail investors in the marketplace. So access to capital as well as access to investment in terms of promoting financial inclusion. Islamic financial infrastructure, as we go to the next level, they need to invest in innovative platforms, crowdfunding platforms, commodity murabahah platforms, regulated platforms for creations and redemptions of exchange-traded funds. So these are important infrastructures for the development of Islamic capital markets. So the Islamic capital market basically, comprises of these three main segments. Right. So you have the equity market, you have the Islamic equity market, right? You have the sukuk market, as well as you have the intermediation market, which is the funds market. Now, what I'm trying to say is here, these three segments basically potentially offers solutions, ICM solutions, for the mobilization of long-term capital into the productive sectors of the economy. Right? There need to be some degree of balance into all these three segments. They have a very strong emphasis on development of the sukuk market. Yes, we all agree, right? But we need to ensure there is proper balance, especially in the long term. And I shall demonstrate that basically how these two other segments are just as important in terms of mobilizing capital, long-term capital into the productive sectors of the economy. The Islamic equity market, as we know, basically comprises of companies that are listed on the stock exchange primarily, right? Although there are now concepts about unlisted markets, which is currently being mooted and developed in the marketplace, but predominantly it is a stock exchange. Right? The role of the stock exchange in terms of mobilizing long-term capital into the productive sectors of the economy. And for project financing, apart from sukuk, there is also what is known in the marketplace as infrastructure project financing companies that are allowed to be listed and raise long-term capital through issuance of ordinary equity into the marketplace. And this can be structured as a Shari'a compliant instruments through the various screening methodology that is being developed by service providers or even Sharia boards of a particular jurisdiction. So one route to raising long-term capital for financing infrastructure development through the infrastructure project companies. Government-owned companies, for instance, can basically go into the marketplace and raise capital through listing on the stock exchange. And this happened in the context of Malaysia through the process of corporatization and subsequently transformed itself as a privatized entity and raise capital in the marketplace to develop productive projects in the economy. So, role of the Islamic equity market, right, in mobilizing capital. Now, the intermediation market, the funds market, also offers opportunities to mobilize long-term capital into the various sectors of the economy. The middle portion should read fund structures as opposed to infrastructure funds. So investors would basically, pool money. The fund managers would basically pool money, right, and created a fund structure where those monies can be channeled for thematic initiative or projects in the marketplace. Agriculture, healthcare, education, through a fund structure. Right? And these are possible. One good example in Africa, African Agricultural Capital Funds, which is basically managed, established by a fund manager, basically invite investors from the United States. And the US federal agency, USAID, basically provide a financing guarantee on on additional capital, which basically the fund manager raises through the banks. And this money are being channeled for various agricultural projects in Africa. And what I'm saying is, and this is the most, one of the most so-called low-hanging fruits in terms of development of Islamic finance. Because if you look at the fund structure, there are various Shari'a principles, the risk-sharing principles that can be applied in structuring such a fund structure. You can have your mudarabah structure, you can have your wakala structure, right? In channeling those capital into the productive sectors of the economy or the various projects. One other structure that I wish to share is basically what is known as an Islamic business trust, where basically the fund manager or the asset manager also basically acts as the trustee. So you have a trustee-manager relationship. The trustee manager would basically invite participation from investors and basically use the money to basically buy, for instance, buy or acquire port operations or any other infrastructure projects that is mature. And this is part of the monetization process, especially in cases where infrastructure projects are being undertaken by the likes of venture capitals or private equity. So it creates an exit mechanism under such a business trust structure. And finally, sukuk. I think both our brothers, Brother Ijlal and Zamir, has spoken at length on how effective has the sukuk market been in terms of mobilizing long-term capital for the development of the various productive sectors of the economy. So I shall skip this. What I wanted to highlight is basically there are various credit enhancements in the infrastructure sectors which you could use as part of the sukuk structuring, especially concessions, long-term concessions given by governments to private companies in terms of undertaking the various infrastructure projects. The case for the development of the sukuk market is very clear. It is a regulated market. I think that's why the strong emphasis by a lot of jurisdictions. You do have a proper framework. You do have sukuk regulations that ensures not just basically the issuers are given the flexibility to basically issue and raise capital, but even the consumers, the investors are given due protections under the regulations. Brother Islam mentioned about differing tenures and maturity. It provides basically a facilitative price discovery process, and it creates that benchmark that facilitates the various issuance of sukuk in the marketplace to meet the various needs. Variety in sukuk structures. AAOIFI has a long list of all relevant principles that can be applied in the structuring of sukuks, and basically reining in long-term investors. And I think this is basically the investors' permit in terms of capital providers in the marketplace. I think this is important, especially pension funds. In the context of Malaysia, the employee provident funds, for instance, currently the size of the employee provident funds, basically the EPF, the employee provident funds, is basically retirement funds, where every month about 20 to 30% of an employee's salary are being deducted and pooled into these retirement funds. And today, the retirement fund stands at about $200 billion US. And there is a lot of reliance on these retirement funds for the mobilization of capital, long-term capital, to finance infrastructure development. It fits in nicely because it matches with the long-term maturity profile of the investment of the retirement funds. These are some of the
I think 2 minutes, Dr. Tajuddin.
Yes, Mr. Chairman. So I'll skip the various examples of sukuk structures. Just some challenges. This is the final slide. So one of the challenges in sukuk structuring or the issuance of sukuk is the pricing disparity. Right? When I say pricing disparity, it's the disparity between sukuk and conventional bonds. Now, if you were to go into the marketplace today and try to price a sukuk, all others remains the same, form versus substance, right? The substance is the same, but in different forms. Right? All else remains the same, and you were to go out to the market today and try to price it, you'll find that basically the conventional bonds is priced much cheaper than the sukuk. And this risk premium that is being attached to the sukuk needs to be addressed. And initiative by the like of IFFM in trying to create, for instance, standard documentations would certainly go a long way towards reducing this risk premium and price to have a more efficient pricing for the issuance of sukuk in the marketplace. A good dispute resolution mechanism needs to be addressed. Complexity of sukuk structures and the legal risk needs to be addressed, because all this adds on to the risk premium and uncertainty in the marketplace. Right? So disclosure is another issue. And with that, ladies and gentlemen, thank you for listening.
Thank you very much, Dr. Tajuddin. I'm sure these presentations will evoke lots of comments and questions, but we'll have to stick to our time. We have been given an extra 10 minutes, so we'll go all the way to 1 o'clock, inshallah. And we'll take 3 questions at a time. Please give your name and mention who you're addressing the question to. So we'll begin with 3 questions at a time.
السلام عليكم ورحمة الله. أسامة أبو بكر، مجموعة الرقابة بالأردن. نشكر الإخوة اللي تفضلوا بالحديث عن الصكوك. ألا يعتقد الإخوة وبالأخص الدكتور الأخير أن هناك من التحديات تحدي الشرعي؟ ما زال هناك ملاحظات شرعية على الصكوك، فهل يمكن أن نتغافل أو نتجاوز هذا الموضوع ولم يتم بعد استقرار الرأي الشرعي المريح حول الصكوك لدرجة تجعلنا ننطلق بآفاق يعني أفضل في هذا الاتجاه؟ شكرا.
Muhammad Al-Bashir from Bank Al-Khair. My question or explanation is to Dr. Zamir Iqbal. One of the problems in structuring sukuk is about its relation with the asset of the sukuk. And as you rightly presented in your presentation, one of the success factor of the sukuk is to be closely related to the asset and to be based on share risk. But if you are looking to the practicality and the existing sukuk, there is somehow a deviation from this one in some great part. Not all, but a great part of the sukuk are not following this link between the asset and the sukuk itself. And people, as Brother Iqbal said, there is somehow fear from the risk involved in linking the sukuk with the asset. For example, pricing, how to price it, how to, what do you call, title transfer, and the others. Then there is a problem, and the problem is based on some legal and other problems. But it is very well known that there is a securitization market very well developed in the West, and it is going on, and it has some similarity with asset-backed sukuk. Then my question is, how the World Bank, as it is very well-known organization, and your institution now established in Turkey, can help in explaining this issue and show to the market that there is a possibility in having Islamic securitization and asset-backed, and it can be accepted by the market, and it is a very well-established product, especially if you know that most of the Muslim countries have no rating. And if you move to asset-backed, there is a possibility of having more sukuk, because the sukuk will be rated based on the risk of the asset rather than the risk of the one who issued it. Thank you very much.
This is Abdullah Sohail Ahmed, Imam Masjid and postgraduate student in Dubai. I have a question to Dr. Zamil. Has the World Bank begun to implement Islamic finance products or just established this Islamic Finance Development Center for research purpose?
Okay, thank you very much. We will address these three questions and then we'll take more if we have time. So the first question is, I think, addressed to Dr. Ridwan regarding the viability of continuing depending on sukuks in gapping this, in covering this gap in the financial markets, whether we're talking about debt or equity, when there are still some pending Shari'a issues that haven't been fully tackled and settled, rather, haven't been fully settled by the Shari'a scholars.
I think if you observe basically the development of the sukuk market, first let me try to address the issue of the imbalances between the development of the sukuk market, which is very strong and robust over the last decade, versus the other elements of the Islamic capital market, especially the Islamic equity market and the intermediation market, which is basically the Islamic fund management segment of the capital market. You see a kind of imbalances. There's a strong growth in terms of the development of the sukuk market, as clearly shown by statistics and whatnot. But again, these are structural issues and not just confined to Islamic finance or Islamic capital market. If you look at the accumulation of debt, I think as mentioned by Dr. Sami, this is short. I think we have a fundamental problem in terms of parity between debt and equity, right? There is no parity. Currently, debt is being subsidized, whereas equity is not, right? So whatever cost that you borrow or whatever amount that you borrow is tax deductible, right? Whereas equity, you're not. So equity becomes more expensive, right? So that in itself creates imbalances and promotes the development of the debt market, in this case, the sukuk market, right? That's why you see a very strong growth in terms of development, because it's well subsidized. And these are structural issues, not just for Islamic finance, but also in conventional finance, one. Number two is basically on the various issue about Sharia harmonization or Sharia standardization. And if you look at based on observation, there's two observations. One is basically development of Islamic finance in the domestic market, where basically each jurisdiction basically have their own local Sharia interpretations of how those industries should be developed. And two is basically development of Islamic finance internationally. And this is the important part. If you look at the development of Islamic finance internationally and where there are more cross-border deals, almost 100% of the application of the Sharia structures or the Sharia principle are basically globally accepted because they are trying to invite global investors. And I would promote more cross-border deals in the marketplace so as to achieve the kind of standardization, harmonization in terms of Sharia applications.
Thank you, Dr. Ridwan. Move now to Dr. Zamir Iqbal for the questions of Dr. Amin and our researcher.
Thank you, Dr. Amin, for a very, very good question. I think it requires a long answer, but I'll try to make it short. That, we within the World Bank, we are in a group called Finance and Markets, and our responsibility is to develop the infrastructure. So when we are dealing with our client countries, we are giving them a advice of, or policy advice that in order to create a true Islamic finance and risk sharing, they need to have a much more advanced financial sector within the country and infrastructure before they could attract this risk-sharing products. Actually, if you go to the theory of it, the debt is, people prefer debt because it's easy to monitor, but the risk-sharing requires much more monitoring. So we work with our client countries in discussing, guiding them on the issues of investor protection, providing the legal environment, having a good credit registry, reducing the information asymmetry. So once the financial sector is developed, then it will automatically make an enabling environment for a true sukuk. So we consider, again, this is my personal view, is that current kind of format sukuk is in process of evolution. As the financial sector or system and infrastructure within the countries will develop, it will attract much more risk-sharing related structures. It will take time, but even the current state of affairs, it's actually very risky to even introduce a risk-sharing product because there's no enabling environment. And I go back to Brother Rizwan's ecosystem thing, that unless you have all these ecosystems, then you would not do it. And I think here I want to raise one issue, maybe we can discuss this a bit later on. I think, especially for Islamic finance, reputation risk is very important. And suppose that, since because of the Shari'a governance and so much of complexity in the structure, if there is some issue related with certain structure, it can create a big reputation risk to the industry. And we should be all, being aware of it and try to make our structures much more transparent and at least controversial in that sense. So that is a responsibility of the industry. So when we deal with the client countries, we do advise them on these issues to strengthen the governance, increase the transparency, because once you have this enabling environment, it will attract that kind of funding. And answering to your question, our center is not only the knowledge, we also have technical assistance and advisory services on the regulation and financial sector side. We also work with the financial market development. There is one country in which we are lending them, giving them the money so they could lend to the SME. So we are, very much interested in the SME-based financing, because SMEs are actually an engine for growth. So we believe that once you develop an SME financing in a country, it can also help economic growth. So we are in some countries working on different projects where we are funding some of these activities so that they can go and, have a Sharia-compliant SME financing. But it all depends on the demand, that how many people, countries are interested in getting money from us on a Sharia-compliant way. On the investment side, we do invest in sukuk. We have invested in IDB sukuks, and we are also looking at possibility of issuing a sukuk based on whatever our projects and things. So yes, we are involved with the transactions as well. Not our center as such, but the World Bank, but we do work very closely with them. I hope I answered the question.
Thank you. I'll give the forum to Dr. Ijlal, for a quick comment on Dr. Amin's question. But I'd also like to direct our attention to the fact that we still need, of the issues that need to be addressed, is standardizing the usage of terms, because we still have a lot of inter-exchange between asset-based and asset-backed. And very often we use term asset-based as we had today, meaning asset-backed, whereas the prevalent usage in the industry is that the properly Sharia-compliant manner is asset-backed. Whereas etymologically, literally speaking, I think asset-based is more correct. And therefore, I think we have this confusion. And therefore, we have different speakers using the term with a lot of inter-exchange, and therefore causing confusion also to the others. So maybe this also has to be standardized by the various standard setting boards. Quick remark, please.
Sheikh, shukran. I think I totally agree with Dr. Zamir's view. One is really the size of the matter. If you see the tahawut sector, you cannot really have a risk sharing because, the market could be, Islamic institution on one side and the big, windows on could be other side of the market, which could be the provider of the hedge. So the size is not there for us to have, Ideally, both Islamic bank can have an opposite position. So at the moment, we are not reached that. So there is no issue of, risk transfer is there, not risk sharing, which ideal. Then if you recall, we did 2 consultations on Sukuk. One was on restructuring and the other one was Sukuk standardization per se, in general. And what has really come out, because from our side, we want to see asset-backed Sukuk. But the issue is really, practical issues are there. One is which type of assets, right? Whether, you can title transfer that asset, that's a big issue. Investors, whether they are willing. We know out of Dubai, investors were not willing. See, to take that asset, they're still, the market mindset is, obligor, obligation, their guarantee for me is enough. Whether it's rated, name lending is less now, but still, if it is a big size, DCC corporate, they will prefer to go there and say, look. So these are, I think, things, and we are really, again, we did our working group on Sukuk very recently last week, and I had again put this question, what we need to do. And I think we need to really collectively work on these issues and sort of overcome. Like Islam rightly mentioned, we need to, standardize certain terms, make it more clear. There is sometimes a lot of confusion which is there. We also have to see, if you, look at, the Murahaba Sukuk. If you see majority of the Sukuk at the domestic level, because of various reasons, they are Murahaba Sukuk. But the issue with Murahaba, sometime, they were, some may have bought the Murahaba at discount, which is Shari'a-wise not allowed. So this kind of things are there, which we have to really overcome. And so I think we have to move and work collectively, and these are the real issues, which I think we progress, inshallah our size increases, and we at the same time have to address these issues. Jazakallah khair.
Thank you very much. We'll take 2 more questions. I don't think we have time for more. If we have, we'll come back to the floor. One from Dr. Hussein and one from Dr. Dharir.
Bismillah ar-Rahman ar-Rahim. I think the challenge is there and will continue. And we should know really what are our real problems and to try to solve it. When we issue sukuk, in particular, or any Islamic financial transaction, players are many. You have central banks, you have auditors, you have legal, you have Shari'a, and also you have rating agencies. Every player, no sukuk without all these people participating. They are the player. Everyone insists to go to the play ground to use his own rules. Sharia is sukuk is a Sharia product, no question about that. And we should go to the Sharia principles. But no one is ready. When you come to legal firms, they say, no. Let us have English law, the governing law. But how it comes? If there is a contradiction between Sharia and law, you come to say, sukuk ijara, the assets sold to the SPV or to the sukuk holders, should go to off-balance sheet. They said, no. يعني auditors insist should be on balance sheet. To sell it and take the price and to keep it on your balance sheet. And so on. When you come to rating agencies, when you come to central banks, the only solution that when we want to issue sukuk, every good equity, real equity. No one. Maybe we say, let us relax, but as a matter of fact, this idea of asset backed and asset based it has nothing to do in Sharia, in Mudarba, in Musharka, in any Ijara. It is an ownership. That means all part players, all those people should come together in a seminar like that, and they should agree that when we play football, we should accept the same rules. It is Sharia principles. Shukran.
Jazakallah khair. I think this was a self-explanatory comment, so it's not a question, it's a comment direction, and well taken, well accepted.
بسم الله الرحمن الرحيم. الشكر للإخوة المتحدثين، كما أشكر أيوفي لتنظيم هذا المؤتمر. ذكر أكثر من متحدث عن الصكوك الإسلامية أنها يجب أن تبنى على أساس اقتسام الربح والمخاطر، وهذا أمر جيد يصب في مصلحة التمويل الإسلامي الحقيقي. ولكن السؤال، لا نجد صكوك الآن حقيقة تبنى على هذا الأساس، ولو بنيت على هذا الأساس كما ذكر المتحدث قبلي فضيلة الشيخ، ستصطدم بوكالات التصنيف، بمعنى أنها لو كان هنالك اقتسام لمخاطر السوق الحقيقية فإن التصنيف الذي ستحصل عليه تصنيفا متدني، ومن ثم يكون هنالك إحجام. ولو قامت البنية على أساس تجنب المخاطر وإلقائها على عاتق الغير فإن هذا سيعطيها تصنيفا جيدا، ولكنه أيضا سيطعن في المقابل في التزامها الشرعي. وكنت في ماليزيا وذكر أحد رئيس هيئات الرقابة الشرعية في إحدى بنوك الخليج أنه بدراسة 26 صكا لم يجدوا من بينها إلا صكا واحدا شرعيا، وصنفوها جميعا كهيئة شرعية منعت البنك في الاستثمار فيها بأنها أدوات دين فقط. هنالك تعارض كبير بين المتطلبات الحقيقية الشرعية وبين متطلبات التصنيف. ألا يعني هذا أن نقوم بتطوير معايير خاصة بتصنيف المنتجات الإسلامية حتى لا نقع تحت مطرقة وسندان وكالات التصنيف التقليدي؟ ليس من العدل أن يكون التصنيف التقليدي المبني على أدوات الدين والربا هو الأساس الذي أقيم به أدوات التمويل الإسلامية. ألا يعني هذا أن نطور الآليات التصنيف بطريقة تتجاوب مع التمويل الإسلامي؟ وهذه أكثر نقاط الضغط التي تؤدي إلى التحايل الشرعي في إنتاج الصكوك. هذه واحدة. الأمر الثاني،
يكفي يا دكتور، ما في وقت.
شكرا.
شكرا. السؤال موجه لمن؟
والله تكلموا المتحدثين الأولين تحدثوا عن المشاركة في
Thank you for the question. I think the questions talks about the real need to basically structure a sukuk based on the principle of equity principle, right? And its relationship with the rating agencies. I think this is a very complicated issue. As it is now, sukuk are being structured as a debt-based instrument, as it is. and scholars has been basically giving various opinions to the various structures and to say that the structures as a debt instrument is compliant with Sharia. I think the problem with sukuk is the definition of sukuk in itself, right? It represents basically proportionate ownership to the underlying assets. Now, then come the next level, which is basically the structuring of the products. And this is where the complication lies. Either it's asset-backed or asset-based. Because if we were to truly structure a sukuk, which is purely equity, then there's this relationship with the marketplace, which is basically what are the kind of investors who has the appetite to take on equity-based sukuk, right? So there is this relationship. Yes, you have the supplier of the product, which is basically an equity-based sukuk, but where will you find the investors? Because you will need to find investors that have that risk appetite to take on those investors. No, the solution to that is basically to create a new market. You need to create a market where basically you will find investors who have the equity sukuk appetite to take on that risk, because the returns from those equity-based sukuk would certainly be higher. And if you talk about the role of the rating agencies, and certainly in Malaysia, one of the rating agencies have developed a methodology to rate, for instance, this equity-based sukuk or musyarakah or mudarabah-based sukuk. I think I shall stop there.
Thank you very much, panelists and members of the floor. As you can see, the presentations and the comments evoked some issues which still need to be addressed, and in fact are quite charged and even loaded. I'm sure if we had the time we could continue for 2-3 hours at least. But I'm sorry, we have to close now. We've already exceeded our time limit. And we'll move now for lunch and break for salah and come back inshallah at 2:30. Wassalamu alaikum wa rahmatullahi wa barakatuh.